In this video, we're going to be talking about one of the greatest ways to reduce your mortgage quickly and shave years off of your loan. Welcome back to my channel. My name is Reese. In today's video, we are talking about offset bank accounts and how they work and what you need to do to make sure you're maximizing that reduction in interest that you're paying to your bank. I'm sure you've heard the term offset before. Offsets serve the purpose of rewarding you for saving your money whilst reducing the amount of interest that you have to pay to a bank, and allows your money to be accessible at all times. Their purpose is to shave years off of your loan. What does this actually mean? The way they're designed allows you to put excess money towards your house or home without actually paying off the loan. You can kind of think of them similar to a high interest savings account, but in the opposite effect. Instead of making you money by generating interest, they save you money by stopping the banks from charging you more interest. And I'm going to go through an example shortly. Offsets are tied in with home loans specifically. So this is to do with housing and when you buy a house. With home loans, interest that the banks are going to charge you is calculated daily. Therefore, the ultimate rule of thumb with offsets is that the more you have in them means the less interest you're going to pay to the bank, whether that be fortnightly, monthly, or yearly. So let's go through an example just to give you the actual perspective of how they work. Say you have a home loan of $350,000 and you have one offset bank account linked to that loan. Let's say that the offset has $25,000 in it. Instead of paying interest on the full $350,000, you would only be paying interest on $325,000. Keep in mind that the interest is calculated daily and that the bank usually only adds interest to your loan once per month. So for this example, at 3%, you would be paying roughly $28.80 every single day in interest to the bank. On the full $350,000, which is $10,500 in interest per year to the bank. Now with $25,000 in an offset, you would be paying $26.70 per day in interest, which totals at $9,750. This ultimately saves you $750 a year for doing nothing other than having your money sit in that bank account. As your offset account grows, you will pay significantly less in interest as the years go by. And here is proof. What you're looking at on the screen right now is a screenshot from my personal spreadsheet of my house repayments for the last year or so. As you can see in the interest column, the amount paid every month or every fortnight fluctuates depending on how much I have in my offset at that time. The lower the interest repayment for that fortnight means I had more money in my offset. And you can see the trend as my savings grew in that offset. You can see the slow decline of interest repayments where I'm now paying more principal off of my loan. When you calculate this over the course of a 30-year loan, you would most likely see savings in the tens of thousands of dollars. And this is the big one, you would most likely reduce your loan by more than 10 years, depending on your ability to build up that offset. Based on how I've been tracking, I've had my loan for over a year and a half now. My loan was originally a 30-year loan, and based on my savings right now and how it's all working out, I've already reduced it to an estimated 25-year loan, and that's in 2 years. Over the course of the next 20, I'm fairly confident that it's not going to be a 30-year loan. So offsets can be a really useful utility in bringing down your overall loan over the period of 30 years. So now some important facts about them. How many can you have? This depends on your lender and what they allow you to have. But ultimately, with a home loan, you only need one. You can have as many as you want for specific purposes, and I'll explain how many I have in a minute. But as long as you have one and your big savings is in there, that's generally going to be the only thing you really need to reduce that loan significantly. In my opinion, every dollar counts. So if most of your money can be in those offsets to reduce that interest on those loans, I would be definitely doing that. With offset accounts being attached to home loan packages, there are generally fees associated with them, like account fees or just a monthly account fee for the offset. Absolutely do your research. Absolutely check the competition and find the best one for you. How I structure my offsets, I have 5. I have one for each type of bank account that I utilize, that being an emergency fund, a spending account, a bills account, a house account, and a holiday account, which you can go back to previous videos and see how I structure that. It is something that I will tailor in future videos as well to give more insight as to why I do that. But for the sake of this video, I have 5 offsets and they are all free. They were the criteria for me to have all 5. If I couldn't have had 5 for free, I would have just stuck with the 1. When you put money into an offset, that money doesn't get automatically taken off of your loan. It just sits there where you can access it. So don't think that having money in an offset means the banks can take that or will take that. They can't. It's your money, you can do what you wish with it. Offsets are offered with most home loan packages these days, whether it be an investment home or a owner-occupied one that you're going to live in. And they also are generally offered with fixed interest rates and variable interest rates. So no matter what type of package you're looking for, an offset capability should be available to the package that you're signing up for. Definitely something to ask when you're planning on buying a home. Make sure you check with your banks and lenders what offset capabilities they offer. Now, there are 2 types of offset accounts and they're not overwhelming at all. They're very simple in structure. The first is a full offset capability, which means that 100% of the money in the offset goes towards reducing that interest amount every month that the bank's going to charge you. The other type is a partial offset account. Now, partial means instead of it being 100% of the money in there, let's say you have $100,000 in an offset, it might be only 70%. So $70,000 in that account is going to be put towards reducing the amount off of interest paid to you from the bank. The only reason that these 2 types of offsets exist is generally because there are other conditions that come with the home loan package, such as fixing your interest rate for a long period of time. Partial offsets are generally offered with that type of capability or that type of loan because the banks still want to make as much money from you as possible. So the most popular offset account type in Australia is a full offset, and that is the general one that most home loans have. But you should be aware that there is such thing as a partial offset, which means not the full amount of the money in your offset is going to reduce your interest. There should be no fees associated with taking money out of your offset account or putting money into your offset account. With other types of accounts on home loans, that is something definitely to consider. Some loans will charge a higher interest rate for having an offset capability on your home loan package. Absolutely do your research. Absolutely make sure you have the facts before signing anything. So overall, the most desirable outcome with having an offset on your home loan package would be to be able to have as many offsets as you want, having no fees on those offsets, so you can have as many as you want for free, to get a good competitive rate with an offset capability, and to make sure those offsets are fully offsetting the amount that's in them. So when considering taking out a home loan or buying a home, I highly encourage you to contact banks and lenders to make sure that you are across what offset capabilities they have on offer. Ultimately, it could save you tens of thousands of dollars and reduce years off of your loan, which who doesn't want to pay less? It just makes sense to do it that way. So that's pretty much the deal with offsets. They are quite simple, but there are lots of things to consider. I really hope you learned something in today's video. If you enjoyed it, please consider giving it a like and subscribing, and I will see you in the next one.